Hello and welcome to Crypto Weeklies. In this video, we discuss our new model for a Bitcoin diminished return based, decay based logarithmic regression model. This model is aimed to identify the bottoms as well as potential diminished peaks for Bitcoin. None of the content financial advice. This chart is available on cryptoweeklies.com. Link on the bottom of your screen. It's available for free for all. That's my own website. So starting with this diminished decay model, we start with Bitcoin. We also have launched the same model for major cryptos, at least the top 20 cryptos by market cap. We'll slowly add similar analysis for the cryptos outside of top 20. So what is this model about? This model first of all tries to identify a fair value for Bitcoin using price action since September 2014, which is about 15 to 16 years worth of data. On this weekly candles of Bitcoin's price action on this y-axis on a log scale, and x-axis the time, being identifying those instances where Bitcoin is fairly valued using historical price action as a guide, and using regression based techniques to identify if Bitcoin at any point is overvalued, undervalued, or fairly valued with respect to its historical price action. So that's the fair value function, and this is a non-linear fair value function, a polynomial regression function which has 2 degrees of freedom, is essentially coming out to a quadratic based regression function. This pink line over here says that the fair value of Bitcoin per the last 15 years of data is at around 78k. Price is right now at around 66k. That means there is an undervaluation of about $12,000, which is typical in the bear market. You can see in the bear market of 2018, in the bear market of 2022, the price is not just below the fair value, but also we have the bands over here. These are the residuals based on the standard deviation of the price and the fair value. The first band is this green line over here. This is again, these are not equidistant from the fair value. These are trying to account for the diminished volatility to the upside and to the downside for Bitcoin. So that's why the length or the distance between the pink line and the green line is not equidistant. So that's hard coded based on its price action again. And whenever the price is not just lower than the fair value, but when it's lower than this one standard deviation residual in this green line, typically at that point again, once the price crosses this green line as a threshold, again one could argue that again in 2018 this came later half of November 2018, whereas in 2022 this undervaluation came quite early in June of 2022. This time around, February was one instance where the price did hit that undervaluation zone. But again, there was a bounce like there was back in May 2022 till June. So this model helps find the first DCA entry point for Bitcoin in the bear market years, whenever the price goes sub 59k, and this is an increasing function. So what is the fair value? What was the fair value in September 2025 is now even in early February 2025 it was lower than 59k. Now it's slightly higher than 59k and $200. So that's the first line in the sand. The secondary residual is the 2 standard deviation dark green line. Again, you would notice that the slope or the distance between the green line and the dark green line is not equidistant. That's because it accounts for the diminished returns. This green line again has been more reliable to 2 standard deviation undervaluation based metric, has largely been reliable to identify close to the bottoming part of the bear market. This in 2018 did not come into fruition till the 2020 drop. Again, the likelihood that the price has to go 2 standard deviation lower than the fair value is much less than it has to go 1 standard deviation residual than the fair value. No single model can predict what price has to do tomorrow, But these kind of models, especially using regression based data science based fundamentals, help identify and help tune out the noise at a daily level or even at a weekly or monthly level, to identify what the price action has been doing for several years to several cycles or more than a decade long for Bitcoin right now in 2026. So personally speaking, accumulation for Bitcoin in the bear market, again at this point, as the price action is still not below the green line, does not the one standard deviation green line that is at around 59k has not breached yet. In 2026, it's very likely that the price action in the second quarter or third quarter of 2026, it's very likely that the price action sees some lows below the green line, and that's personally when DCA makes the most amount of sense, or dollar cost average makes the most amount of sense for me. Coming back to the positive side of things, again this is all bearish residuals. We also have the bullish residuals to identify if the price action has been in a euphoria phase like it was back in 2025, when the price action went above the one standard deviation residual, the yellow line over here. Price kind of culminated just shy of that 2 standard deviation residual at around 136k. That was the 2 standard deviation residual in October. The price went as high as about 125, 126k, 10k shy of that level. But again, as the thickness of this orange line is diminishing, what we can see from cycle to cycle. In the first cycle, that is major cycle for Bitcoin in 2017, price went 3 standard deviation residual, the red line. The second one, it barely touched the 3 standard deviation and fell short of that 3 standard deviation residual at the peak. This was in May, where the price came really close to the 3 standard deviation residual, but the eventual actual peak for 2021 was at the midpoint of the orange and the red line over here in November, where the overvaluation territory would have been at around 83k, the 3 standard deviation one, and the 2 standard deviation was at around 58k. The peak was at around 69k. The last time around, the 3 standard deviation line did not come into play. The 2 standard deviation and the 1 standard deviation, the midpoint or close to that midpoint of slightly higher than the midpoint of the 100k and 134k, at around 117, 120k. That was the peak for Bitcoin for that cycle. So in the next cycle, if we were to trying to extrapolate the trend, the case for Bitcoin, again the bear case for Bitcoin comes from this blue line over here. That's the worst case scenario, where the price action could theoretically go if there is a macro recessionary trend, where the bottom for Bitcoin back in 2020 was at around 3,800, or 2022 was at around 15,000. That similar drop for Bitcoin could take its price action at around 33k. That is the extrapolated bottom, whereas the extrapolated peak for Bitcoin, let's take this again. Instead of looking at in a polynomial fashion, this extrapolation looks at the price of Bitcoin in a linear fashion using linear regression based extrapolation. This model says that price of Bitcoin, again in the worst case scenario, if there isn't any significant bullish bias in the market, if in the next bull run, if there is a non-euphoria peak for Bitcoin, that peak if corresponds to late 2028, early 2029, that peak for Bitcoin could be close to 400k. As an extrapolation for Bitcoin, again it does not account for the extrapolation does not account for any diminishing return. That's very hard to account for in the extrapolation sense, because it's a non-linear model. What we also have is the on the website, this is the home page, also have the regression based model with this is the model without the diminishing returns, and this model says that the likely 3 standard deviation peak for Bitcoin is at around 370k in the next run. The more conservative one for next run is around 220k for Bitcoin. So that's also a theoretical possibility for where the price action could go in more bullish or favorable season for Bitcoin. So in terms of how the risk levels are at this point. They are at around between 0.3 and 0.4. Again, the same regression function we used at a daily level and helped color code the risk levels based on where the current risk is. It's in the middle of the bear market drop. It's not as severe of a drop as it is usually at the bottom of the bear market. It's in this territory between May and June 2022. Eventually, this in the later half of 2026 or even in the second quarter of 2026, there could be an area where the risk level goes below 0.3, and in this sky blue or cyan color, and then eventually the navy blue color between 0.1 and 0.2 risk. That's what awaits for Bitcoin per my interpretation of these regression based models. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.